Welcome back to Tani's Tax Consulting Services YouTube channel. My name is Raam and I'm an Associate Director with Tani's Tax. Today I would like to touch on indirect taxes, specifically on service tax. Service tax is imposed on transaction basis, which is on the sale value of the services, unlike income tax, which is tax on the profits. This is specifically only on the value of the transaction every time the transaction occurs. Service tax is a positive list. Only items listed under the first schedule of the service tax regulation are taxable. Therefore, it is important under service tax to determine the tax treatment at the inception of the transaction. Failure to do so, unfortunately, because this can be a recurring transaction, you may have an issue of underpayment or overpayment of service tax at a later date. And service tax can go back 6 years if you have made a mistake. A perfect example would be the Redberry case, where the contract between the taxpayer and the service provider, which was initially intended to be a rental of space agreement, later on the Court of Appeal determined that it was advertising services. This was because the contract, despite it being intended as a rental of space agreement, was silent on the term rental. Rather, it was a revenue sharing agreement for advertising services. As a result, the same transaction now was being taxed twice. Once at the point between the service provider and Redberry, and second between Redberry and the customer for actual advertising services. This was purely due to the lack of tax planning and structuring at the inception of the transaction. The agreement should have reflected the true nature of the transaction, which is rental of space, and the payment mechanism was through a revenue sharing agreement. Therefore, it is important to clearly define the nature of the transaction and bifurcate the transaction between rental of space and the advertising services. The Court of Appeal highlighted why they were compelled to agree with the High Court that this was advertising services. Firstly, it was because the nature of the agreement, as I mentioned, the nature of the agreement did not define rental of space clearly. Secondly, if the scope and nature was clearly bifurcated, the question of control can be addressed accordingly. Finally, the nail in the coffin came from revenue sharing mechanism. Because the revenue sharing mechanism was in place, the whole transaction between the service provider and Redberry was seen as a joint party agreement to provide advertising services. Therefore, with service tax, it is important to determine the tax treatment at the inception by looking at four key elements, which is the relationship that is defined in the agreement, the responsibility of each parties in the agreement, activities that are performed under the agreement, and finally, what are the deliverables? If these four parts can be correctly addressed, the question of underpayment or overpayment may not arise at a later point because you have clearly looked into what is the transaction, whether it is taxable, and what is the tax treatment. Thank you very much. Please do subscribe to our channel.